Hello and welcome to Dangerous Minds. I'm Richard Metzger, and my guest today is Charles Hugh Smith, the author of the new book, Survival Plus. Charles, great to see you.
Thank you, Richard. Great to be here.
So, Survival Plus, what prompted you to write a book called Survival Plus?
Well, I think the main impetus was the status quo cannot continue as is. And so, and this is the theme that survivalism or survivalists have picked up. And their approach is hunker down, get your bunker, weapons, stockpile.
Yeah.
And I think that's a very negative view of our possibilities. So the book is about a more positive approach.
How do you positively spin the bottom falling out of the U.S. economy or the world economy?
I think we begin by saying that the current status quo is really not that great. It's not great for the earth.
Agreed.
Based on huge consumption. And it's not great for the debt serfs, the people caught up in this thing of desperately trying to make their bills to pay for largely worthless stuff like McMansions and, stuff they don't really need to and doesn't make them happy.
So, it would be very difficult to write a prescription. I guess let's start with what the symptoms are of the current situation. Everybody knows that we're in a hell of a mess.
Yes.
But when we talked in March, I was reviewing my questions. Some of the questions that I asked you then in our first interview, they seem inappropriate for today. They seem a little bit more alarmist, let's just say. And I wasn't trying to be alarmist in March, but if you look at those questions now and put them in the context of like what's happening right now, watching CNN yesterday at the gym, there was a discussion about things aren't quite as bad as we thought they would be come the fall, or that the velocity of the fall of the economy hasn't been nearly as quick as some analysts expected. I mean, how would you look at those kinds? It seems to me like almost this like sort of false optimism is going on, but yet people buy into that. The market buys into that.
Yes.
What do you see it though?
It seems that number one, the government has spent $1 trillion more this year than they did the previous year. So the government is borrowing and spending a tremendous amount of money to compensate for the loss in the private economy. And of course, that stimulus is real. I mean, the money's real, it's being spent. But that doesn't mean that the underlying economy, the so-called organic economy, has actually been improved or stabilized.
Now, in Sweden, they talk about how there's the stock market and then there's the real economy, and they actually don't have anything to do with each other. That seems to be, again, the Swedish viewpoint on this. How do you view what the Wall Street's fortunes versus Main Street's fortunes at where we are right now?
There's a huge divergence between the two, and a lot of people have commented on it, that Main Street is suffering horribly, there's retail is, there's empty storefronts, unemployment is, as you and I were discussing before, somewhere between 15 and 20%, if you broadly defined. So Main Street, the average American, is still under the gun financially.
1 out of 6 workers. 1 out of 6.
And structurally, it seems that our economy is based on debt. In other words, it's not just the consumer spending earned money. The consumer is required to go borrow an immense amount of money and leverage their whatever money they have and then go spend all of it.
And had that borrowing not have gone on for the past decade, we would have been in a heck of a mess back then.
Yes. The number
it's artificial.
Yeah, I mean, we borrowed $5 trillion in home equity loans and spent it. I mean, that's like that's almost half the GDP for any 1 year.
But now that those kind of lines of credit are cut off.
Yes.
I mean, what does that mean for the real economy and for the tax base?
I think it means that the economy is still in a tailspin. And it's still, people have lost like $13 trillion in assets in their homes and 401ks and all that. Many people have, as you say, lost their jobs. And the credit lines that were once available for them to borrow and spend are gone. And those are not being fixed by the government just spinning out stimulus money. And they're not being fixed by Wall Street rising.
Well, nor are they being re-extended by the banks.
That's right. Yes, exactly. And so the question is is the government fixing anything fundamental, or are they simply just filling the wallets of various elites and the people on unemployment, and then what happens when that runs out.
I mean, I think they were just hoping
Yeah.
that it would start to rise again. And that's happened in the past.
Yeah.
In past recessions, it hasn't gotten nearly as bad as it has this time.
Yeah, I think we have to look at the FIRE economy, you know, the finance, insurance, and real estate. That developed into this gigantic part of the U.S. economy only in the last, 8, 9, 10 years. You know, the real estate bubble. Now the FIRE economy is dead. I mean, there's 10,000 hedge fund employees that don't have jobs, and it's like hundreds of thousands of people that those industries are not coming back. And so what's there within the status quo? What is there to restart, the consumer debt-based economy? I don't think there is anything.
I don't see anything at all. Well, one thing that I wanted to ask you about is that you had talked about housing prices and how if you look at, traditionally, housing prices rose just a little bit, and then all of a sudden, 10 years ago, they start to go up massively. And you've written about that price line, that the retracing that down to where it was. Do you think housing could go back to, let's say, pre-2000 levels?
I think it's guaranteed. It's I just saw the median prices for houses in California, and it's already retraced like 74%.
Wow.
From approximately 275 to 600,000, and now it's like 325. Another 75K off, and it'll be back to 1998.
Wow. I mean, I've read a number of prognostications about that. I think one was from a UCLA economist who was saying that, in a worst case scenario, this is about 2 years ago, it'll probably retrace, maybe we'll lose 40% of the peak value. And then he said again, well, I'm going to revise that, and it's probably going to go 50%, right? Well, clearly, obviously what you just said, we've overshot that.
Yes.
What does that mean for the government? What does that mean for, property taxes? Whoa.
Yeah. I just read that literally 99%, I mean, that sounds like a ridiculous exaggeration, but it is literally 99% of all the mortgages that have been securitized and sold this year in the U.S. have been federally backed. The banks, private institutions, have only issued $15 billion, and $1.5 trillion is the government. So the entire real estate mortgage market is owned by the government. So, so in other words, the stimulus is so stupendous that it's scary for those people in the industry. Well, what happens if the federal government ever stops writing 99% of the mortgages or guaranteeing them?
Well, if you looked at that as that like a metaphor, like a furnace.
Yes.
They are throwing this money in.
Yes.
And it's burning up to to make this energy in the economy.
Yes.
But it is not necessarily producing energy long term, shall we say. It just seems like a short term fix, a very myopic fix.
Yes, exactly. And so then we have to wonder, what else could the government be doing with the 8 trillion, or the numbers are just so stupendous, nobody's even sure. It was 8 trillion that they used to fund the, bail out the banks, and then now it's 13 trillion with 23 trillion guaranteed, several trillion thrown into the housing market. What else could have been done with that money?
Oh yeah.
Yeah.
Oh yeah.
And so is it solving anything fundamental? And I think the key to what I was hoping to describe in the book is no, there's no way to fix what's fundamentally wrong by throwing $1 trillion at it, or 2 trillion, or even 5 trillion.
Let's get back to the book. Usually, there's a beginning, there's a middle, and an end, even in nonfiction. Where do you start in Survival Plus? What is the groundwork that you lay for your readers?
The groundwork is that the status quo, whatever I would call it the neoliberal capitalist system that's now global, and it's largely run or operated, financed by the United States and its allies, China, Japan, and Europe, is structurally doomed for a number of reasons. Demographics, the population is aging, the entitlements are impossible. Here in the States, we're paying for an empire, a military, global commercial empire that's unsustainable. It requires way too much money. And we're borrowing trillions, which is just passing the debt off to future generations. All these things are completely unsustainable in the longer term, meaning a decade or two.
Well, is the debt repayment sustainable? I mean, that's one of the things that I always think about is, no less of a thinker than Neil Ferguson was talking about how America will probably default on its debt to China.
Yeah.
That does seem likely. I mean, these astronomical debts are so much that it's you know, the country seems to be, the nation seems to be in the same place that, you know, a debt serf who's got 10 credit cards maxed out would be, to say, like, you know what, screw this, I'm not going to pay it anymore. I'm going to declare bankruptcy, get a write-off on this, and, you know, so what, you're going to have to pay cash from now on, pay as you go. But you've jettisoned a massive debt that's going to be a huge drag on the economy. Do you think that that is a likelihood?
I think so. A lot of people, and I do refer back to the Roman Empire. I mean, it's the classic case of an empire which overreaches and then overspends and then degrades or debauches credit and its currency, and then it ends up collapsing. So it seems like we have two choices. Either, as we say, as you say, we default on all this debt that we've accumulated and are accumulating, or we write the dollar off until it's essentially drops to a penny. And that is the equivalent process of destroying the money that we owe other people. But of course, both are catastrophic to the citizens of the United States as well as our creditors.
Well, that means it's no good for anybody.
Yeah.
Really?
Yeah, that's right. And so the other point I was hoping to get across in the book is there are positive alternatives. If people are so wedded to the status quo, as if the GDP doesn't grow 3.5% to 4% a year, we're doomed, and if the consumer doesn't borrow and spend, we're doomed, and it's like, that doesn't seem quite right. Isn't there some other way to run the world?
No, I'm totally there with you. The idea of a 3 to 4% growth in the economies of China, in the economies of India and the United States, it basically, I read a figure like that, and I see that as being an alarming thing, because it's an admission that unless we grow like this, and of course that kind of growth is so detrimental to the planet and to the ecology.
Yes.
That on one level you say, well, that's a really, we need this kind of growth. Do we? Why? Why do we need it?
Yeah, and one of the things that we spoke about in our first interview in March was what I would call in the book the structure of happiness. Are we really fulfilled and happy people, like basically working 60 plus hours to basically pay our debts? And the answer is, of course, we're not. We're super stressed out. We're heavily medicated or self-medicated. It's like almost an illusion, or what I call a simulacrum of happiness.
Right.
Yeah.
Well, I mean, I look at the kind of monthly bills that I had to pay when I was in my 20s, when I was in my 30s, and now that I'm in my 40s. I mean, I think, like, how could I have ever survived on the money that I made then, versus, you hopefully your income will grow as you get older. But I look back on that and I think, like, wow, it's like a boiling frog. You don't necessarily feel the heat until it's really oppressive. And I think everybody started to realize that, they were pedaling a lot faster than they should have been.
Yeah, and statistically, I also address this in the book, that income disparity or inequality has been rising for like the last 35 years. In other words, it was very high. I mean, we are at an income inequality level that's 1929. That was the last peak. And of course, what happened next?
Yeah, it's unsustainable. People just get mad about it.
Yes.
Why should some, 26-year-old jerk-off working on Wall Street make a $30 million salary? It doesn't make any sense. It's not about their talent.
Yes.
Certainly, it could be about their parents, getting them in there or something like that. But it's a strange thing to watch when there's no real. It's like, well, you haven't done anything that great. It's like it's like looking at a lotto winner or a guy who wins a lot of money in a Vegas casino. It's like, I don't look at something like a fortune like that and think, oh, that's really worthy of respect. This person is a self-made man or woman, and did this of their own accord and pulled themselves. I mean, it's nonsense. It doesn't make any sense. It's such a random and arbitrary way to reward people.
Yes, and I was thinking, as I describe in the book, that there's a dynamic in which the average person circa 1997, 1998, the dot-com boom, they looked at the wealthy and the elites, and they said, well, these guys are making tons of money in dot-com stocks and NASDAQ stocks. So they all borrowed money on leverage, basically, or margin, got into all these stocks at the top, and then were decimated when they all fell off. And then now, I think the same dynamic happened in the housing boom, that everyone looked at these people leveraging huge amounts of money and basically gambling on an asset class rising, in this case, real estate, which everybody thinks they understand. Oh, well, a house has value. I can own 3 houses. I can play this game. And so that prompted the American public to compensate for their lost wages, as you say.
Yeah, it was the new game. After the dot-com thing, this was the new game. It was the new fiction that Wall Street gave people to park their money in. You could park your money in this fiction, and you could make, let's face it, fictional profits from this that were real as long as you got out early enough.
Yeah. And the dynamic, I think, which is sort of hidden, is why were Americans so anxious to get into this game? Well, because
greed.
Well, and yes, definitely human greed.
Losing lost ground.
And all the lost ground that they've lost in their regular wages. You know, that the wages have been, you know, the percentage of national income has been going in larger and larger quantities to like this narrower and narrower slice of the top 1%, top 5%.
It's not sustainable.
Yeah. Exactly. So as people have lost purchasing power, as you said, $3,000 was a lot of money in, like, say, the 70s, and now it's like you can barely live in urban America.
It's a couple of TVs, a couple of color TVs.
Yeah, and so they've lost purchasing power, and they've compensated by gambling. And now the net result is everybody leveraged, everybody gambled, everybody lost.
Well, one place where people gambled in the past decade was buying rental property.
Yes.
And this seems to be, I mean, commercial real estate is really going to be the next shoe to drop.
That's right.
And what do you have an opinion about that situation?
Only that I've read that there's like $3 trillion in commercial real estate loans that are rolling over in the next few years, and there's no way the property is worth what it was. I mean, nationally, it's down 41%.
Well, let's look at a place like, let's say, Southern California, right? If you would have purchased, let's say, a 5-unit building, to rent out, at the peak. And now you can't get rent anywhere near that. I mean, when I moved back to LA, a 2-bedroom, 2 years ago, I moved back to LA from the East Coast, a 2-bedroom, decent 2-bedroom in a decent area, and of course in Los Angeles you need to be near your job. So the rents near the better jobs on the West Side are the higher rents. So that's where we live, and in that general vicinity, $2,500 a month was what the rents were, which was shocking to me, because a comparable place would have been $16,000 when I moved back to the East Coast in 2005. So in only 2 years, a 2-bedroom apartment had on average gone up about $1,000, $1,100, even more, and now it's gone back down. So if you were a landlord who bought at the peak, expecting, well, you did the math and said, well, if I rent these 4 units out and blah blah blah, and you do those kind of calculations in your head, that math is gone. It's off. The possibility of getting that kind of money is history. In history for a long time, maybe for a generation or more. I was saying, what do you think will happen there? Because a lot of these houses that were bought during the real estate bubble, and a lot of property was bought then, were rental units.
And clearly, as you say, there's going to be a lot of bankruptcies and foreclosures in the commercial space. I mean, and it happened in hotels. I mean, they were buying rooms in Hawaii resorts for $800,000 a room. Completely impossible to ever recoup your money.
Wow.
$500 per square foot for Class A, a high-rise office tower. I mean, that's impossible to make that kind of money. So, commercial real estate rolls over. Trillions of dollars will be lost.
There's also going to be a lot of empty buildings everywhere.
Yes.
A whole lot.
Well, and one of the things we spoke of earlier, which I think most people do not appreciate, is with the internet, why do you need a large office or cubicle space? Your employees can work at home or remotely. They can work from, a cafe.
It's not always feasible to do that, but I take your point.
Some of that, and
well, that's going to have a drag on commercial property. That's for sure.
And then of course, there's other issues that what I call like an integrated understanding. In other words, if we look at commercial real estate by itself, then people can propose that, it's going to recover in 2012 and so on and so forth. But if we look at it in an integrated viewpoint, we realize that if we don't solve health care, there is no reason for an employer to ever hire somebody else in the United States if they can find any place else in the world to hire someone, because the cost of doing business here is just outrageous.
Let's talk about healthcare for a second. This summer, there was such an alarming noise coming from the far right and some of these nutty people that would show up at these places, and it just even again 8 weeks before today when we're talking, it looked so grim and so stupid, just a bunch of low IQ buffoonery on our television sets every day, and it would make you mad. But it would also make you really sad for and really, really worried about the future of this country. And I kept thinking, why is Obama not, getting on television and using his, impressive powers of oratory to calm these waters and make people want this? And I think he was pretty darn smart because he backed off from it, let it happen. I mean, again, I don't know how you would say in advance, well, this is my strategy, but the fact that he backed off from it and let it happen, it almost seems like that anger got a chance to burn itself off in the culture until a more realistic thing could be discussed. And of all people, when Harry Reid started to prosecute the public option, which I was very surprised that it came from that senator, basically, because I didn't think it was going to happen that way. But the public option comes back into the picture, and now we start to realize that noise that was being made by a very vocal far right minority has nothing to do with the way most people think. Most people in this country know somebody who's been screwed over, lost their health insurance, lost their job, maybe lost their house as a result of it. Apparently 60% of all foreclosures in certain states have to do with lack of health insurance and just somebody getting sick. That's so cosmically wrong. And for that to happen in the richest country in the world, I mean, honestly, I think the jig is up. If they don't pass meaningful health care reform in this country, why stay? Why stay? I'll go to Canada, please.
There's two points I'd like to riff off of what you just said about the health care. One is, I don't know if you've sensed this as well, that a lot of this rage and anger that's pouring out of what I would call like the lower middle class or the working poor even, it's misdirected, but it's correctly directed at the government, but it's misdirected because the only focus that the outlet was healthcare. But people, I think, are sensing that the government is completely off base in the sense that it's protecting its elites.
Oh yeah.
And it's basically screwing over the citizenry.
Oh yeah.
And so in that sense, those people screaming about communism and all that, what they're saying and their avenue of expression is misdirected. But I think their gut sense that the government is not acting in their behalf is absolutely true. And I think the liberal left may actually be missing the boat here, thinking that the government is doing the right thing and it's actually got the citizens, care and as the number one concern. That's just absolutely not true. All the money, or most of the money, has been spent protecting like banking elites and other elites, And the other point I'd mention, it seems to me that a lot of the healthcare money that's being squandered, it actually is not going to take care of people. It's going to the equivalent of the national defense set of elites. In other words, now we have the big pharmaceutical companies, we've got the big insurers, the hospitals. How are these any different?
Well, I would almost rather see that money going into the health care. I mean, as bad as it is, as corrupted as it is, as horrible it is, inefficient as it is, I'd rather see that money going there than going into the military. Let's face it. I mean, if there was a little box where I could check that says, I want none of my taxes to go towards the upkeep of the military, I'm not sure I would. Yeah, I would. I know I would. I know I would.
I think,
maybe by degrees, but I you know what I'm saying?
Yeah, I understand, and I think my point was simply that we maybe in a way, from my analysis, healthcare, the so-called healthcare, what I call sick care, is actually just another military-industrial complex of like a handful, basically a handful of cartels who basically extract most of the money, and they make the money by more or less managing people who are ill as opposed to actually making us well.
Right.
Yeah, and that's a very disturbing kind of like big picture problem with healthcare in the U.S., I think. We're not interested in welfare.
No, we're not, but nevertheless the money is kept in a domestic, on the domestic front, as opposed to being spent in some far-flung country that we shouldn't have been there in the first place. Trying to impose our way of life on other people.
Yeah, no, absolutely. The no doubt.
Our way of life that we're not all satisfied with. Let's face it. You know what I mean?
Yeah, we're not here to strip mine the rest of the world for our empire.
Yeah. The new book, Survival Plus, Structuring Prosperity for Yourself and the Nation. It's an important read. You can get it on Kindle. You can get an HTML version online. There is a PDF version for free online. It's 2/3 of the book, right? And Charles, best of luck with the new book. It's been great seeing you again and talking with you here today.
Thank you, Richard. My pleasure.